Right now, somewhere in South Texas, the most powerful rocket ever built by human hands is being prepared for a launch that could make certain investors a lot of money, and most people have absolutely no idea it is happening. This is not a small test flight, this is Starship version 3, the production model. The rocket SpaceX is betting its entire commercial future on, and the company behind it is preparing for what could be the largest IPO in the history of financial markets. $2 trillion. That is not a typo. Here is what most investors are missing. You do not have to wait for the SpaceX IPO to profit from this story. 3 companies are already embedded deep inside SpaceX's supply chain. They are already moving, and they could move significantly harder once this launch succeeds. I went through the entire SpaceX supply chain to find these 3. By the end of this video, you are going to understand exactly who they are, why they matter, and what the specific catalysts are that could change their prices dramatically in the weeks ahead. If you want to position yourself before the rest of the world figures out what is happening, hit that subscribe button right now. This is exactly the research that matters right now. Here is what we are covering. The company using precision metal 3D printing to manufacture Raptor engine components that just reported revenue 40% above analyst expectations and surged over 40% in a single day. The European semiconductor company with a 10-year SpaceX partnership that has already shipped 7.5 billion chips for Starlink terminals, with that number projected to nearly double by 2027. And the only publicly traded company that has actually landed hardware on the moon holds NASA Artemis contracts and is guiding for nearly $1 billion in 2026 revenue. I am saving the most asymmetric opportunity for last. Let's get into it. Stock number 1, Velo3D, ticker VLD. Most investors have never heard of Velo3D, and that reaction is exactly why this opportunity exists right now. Here is the reframe. Velo3D is not a generic industrial equipment company. It is the company printing the Raptor engine components that power the very rocket preparing to launch. Traditional manufacturing cannot produce these parts. The internal geometries are too complex, the tolerances are too tight, the heat requirements are too extreme. Velo3D builds industrial-grade metal 3D printers capable of producing components with internal structures so complex they simply cannot be built through any traditional machining process. The parts that come out of these machines are structurally superior in ways that matter enormously in aerospace, where weight, heat tolerance, and structural integrity under extreme conditions determine whether a mission succeeds or fails. SpaceX is a publicly disclosed customer. They use Velo3D machines to print components for the Raptor engines, scheduled to fire on this upcoming Starship launch. And here is the scaling reality that makes this relationship more valuable every quarter. SpaceX's stated ambition is to go from building a handful of rockets annually to potentially dozens. Someone has to produce thousands of new engine components. The geometry involved is so intricate that traditional manufacturing cannot keep pace. Velo3D is one of the very few companies on Earth with the capability to fill that gap at scale. And now, the market is starting to notice. Velo3D just reported quarterly earnings, with revenue coming in roughly 40% above what analysts had projected. The stock gapped up 18% overnight on that news and ran another 25% into the close. Over 40% in a single trading session on the back of legitimate business results. Here is my honest concern. Velo3D is a micro-cap company with debt on the books. It can move 20% in either direction in a single day. This is not a conservative position. And Elon Musk has a well-documented habit of vertically integrating his supply chains over time. Long-term, there is a real risk that SpaceX builds this capability in-house. My takeaway: the only company on Earth printing Raptor engine components at scale just surprised analysts by 40% on revenue. The stock surged 40% in a day and still sits in micro-cap territory. If Starship version 3 launches successfully, the investment case for every SpaceX supply chain company gets significantly stronger overnight. This is a tactical position for investors who understand the risk. Buy on any pullback from the recent surge. Stock number 2, ST Microelectronics, ticker STM. Most investors look at ST Microelectronics and see a European chip company making automotive sensors and industrial components. They are completely missing the most important chapter of this company's story. Here is the reframe. ST Microelectronics has a 10-year partnership with SpaceX. They manufacture the radio frequency antenna chips inside every single Starlink user terminal on the planet. Every dish, every antenna, every device a customer points at the sky to access SpaceX's satellite internet network contains components built by this company. And here is the number that should make every investor stop and pay attention. They have already shipped 7.5 billion of those chips, not million, billion. And that volume is projected to nearly double by 2027 as Starlink continues its global expansion. Walk through the logic with me. If the Starship version 3 launch succeeds, SpaceX deploys bigger, more capable satellites with more bandwidth per orbit. More bandwidth supports more users. More users means more Starlink terminals being installed worldwide. And every single one of those terminals needs the RF antenna chips that ST Microelectronics manufactures. The connection is direct, measurable, and scalable. This is not a speculative thesis built on hope. It is a hardware reality baked into the infrastructure of the fastest-growing satellite internet network on Earth. Every Starlink subscriber added anywhere in the world is a customer for ST Microelectronics components. And Starlink already has over 10 million paying customers, with that number growing every quarter. Here is my honest concern. ST Microelectronics is riding a momentum wave that can reverse quickly if the broader SpaceX narrative stumbles. And as a larger, more established company, the upside percentage moves will be smaller than Velo 3D or Intuitive Machines. My takeaway: 7.5 billion chips shipped, with nearly double that projected by 2027. A 10-year locked partnership with the fastest-growing satellite internet company on Earth. And a direct hardware connection to every Starlink terminal installed globally. At current prices, STM gives you the most diversified and defensible exposure to the SpaceX supply chain story available in the public markets. Drop a comment right now. Did you know ST Microelectronics makes the chips inside every Starlink terminal? Because most investors connecting dots on the SpaceX story have never looked at this company. Let's get to the most asymmetric opportunity on this list. Stock number 3, Intuitive Machines, ticker LUNR. The entire point of Starship is not just low Earth orbit. The architecture of this rocket, its size, its payload capacity, its reusability, was built for a much longer journey, the Moon, and eventually Mars. When humanity makes serious, sustained efforts to operate on the lunar surface, you need more than a rocket to get there. You need landers capable of descending to the surface. You need communication relays, surface systems, cargo delivery infrastructure. You need a company that has already actually figured out how to land something on the Moon. The number of organizations that have accomplished that in recent history is extraordinarily small. Intuitive Machines has done it. They have successfully put a vehicle on the lunar surface. They are a prime contractor on NASA's Artemis program, the ongoing effort to return humans to the Moon and establish sustained presence there. And the financial trajectory of this business is unlike almost anything else in the space sector. Revenue guidance for 2026 sits between $900 million and $1 billion. That is nearly 5 times what the company generated just 1 year prior. Yet the market capitalization sits at approximately $5 billion. You are paying roughly 5 times forward revenue for the only publicly traded company that has actually landed hardware on the moon and holds a multi-billion-dollar contract pipeline tied to the next decade of lunar exploration. And here is the recent price action that tells you institutional investors are starting to connect the dots. The stock made an initial move from around $16 to roughly $32, a 96% gain in about 3 weeks. Then it pulled back in a controlled way, holding tight to its key moving averages. Then it broke out on above-average volume. Investors who positioned on that breakout are sitting on meaningful gains in a very short window, and the catalyst that could accelerate everything is the Starship version 3 launch happening right now. If that rocket succeeds, SpaceX demonstrates the vehicle that will eventually carry cargo and crew to the lunar surface. Every lunar mission requires intuitive machines on the other end to land that cargo. The success of Starship is directly additive to Intuitive Machines' mission pipeline. Here is my honest concern. Intuitive Machines has previously missed earnings targets. They are building a genuinely novel business in a genuinely novel industry, and that carries real uncertainty. Near $1 billion guidance requires sustained mission execution in an environment where delays are common and expensive. My takeaway: the only publicly traded company that has landed hardware on the moon. 5 times revenue growth guidance. Billion-dollar NASA contract pipeline, and a direct beneficiary if Starship version 3 launches successfully. Because every successful Starship mission to the moon needs intuitive machines on the surface. At current levels, this is the highest conviction asymmetric play in the entire SpaceX supply chain story. Strong buy. Let me bring this all together. 3 stocks, 3 completely different positions in the most important supply chain story in the market right now. Velo 3D manufactures the Raptor engine components that make Starship fly. A 40% revenue beat just confirmed the demand is real. ST Microelectronics ships the chips inside every Starlink terminal on Earth, with 7.5 billion delivered and nearly double that projected by 2027. And Intuitive Machines is the only company that has actually landed on the moon, with a billion-dollar revenue trajectory directly tied to the missions Starship will enable. Here is the risk every investor needs to understand clearly. If Starship version 3 fails on launch, every one of these stocks will feel it immediately. The momentum driving all 3 is directly tied to SpaceX's operational success. These are tactical positions in a momentum-driven environment, not decade-long holds. Take profits aggressively on upside moves and size your positions for the risk involved. Here is the investing truth I want to leave you with today. Most opportunities like this do not announce themselves with flashing lights. They sit quietly in the supply chain relationships, in the contract disclosures, in the revenue beats that most investors never read. Until suddenly, they do not sit quietly anymore, and everyone wishes they had been paying attention a month earlier. The rocket is fueled, the supply chain is moving, and most investors have not connected the dots yet. That combination does not stay that way forever. Disagree with any of my picks? Tell me in the comments. Which of these 3 do you think has the most upside? Which one is the biggest risk? Subscribe for weekly research on the opportunities hiding in the supply chains of the biggest stories in the market. No sponsors, no fluff, just the analysis. See you in the next one.